Hi, I'm Steve Bigger, Director of Equity Research for S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is Senior Automotive Industry Analyst Ephraim Levy. Ephraim, welcome to the program.
Good to be here.
So this week's focus stock of the week is AutoNation. Can you tell us a bit about the company?
Sure. AutoNation is the largest chain of auto dealerships in the U.S. It has about 266 franchise dealerships, and we expect that revenues will reach $19 billion in 2014.
So what are the earnings drivers then that you're looking at for this year and next?
Well, we're bullish on the automobile industry. We expect light vehicle new sales to rise 7.8% to 15.6 million units in 2013 and rise above 16 million units next year. And we think that helps most industry participants, including dealers such as AutoNation. The reason why we're bullish about the automobile industry is several factors. Firstly, we think the economy is improving and that people are getting more comfortable about the employment situation and they're willing to buy their cars. Construction and housing is driving auto sales. New vehicles are being brought to the market with greater technology and with increased miles per gallon, better fuel efficiency. That's driving consumers to the dealership, combined with stable gas prices, easy credit availability. So we think that there's going to be higher sales in the U.S. for automobile industries.
So how are you valuing a company like this, and what's your target price?
Well, we look at this company and we use a PE, the price earnings ratio. We think that they're going to earn $3.37 next year, and we'll give it a multiple about 16.6 times that, which is in its historical range, towards the upper end of that, and we think that it's worth $56 then.
And what about the risks? What would you highlight there?
Well, we think one risk was if interest rates spiked, but we don't think that's likely to happen, and a small increase should not hold them back. We think another risk is if the valuations for auto dealerships contract, that could pull down the pricing temporarily. But we think with the bullish indications we have for the industry that also shouldn't happen much.
Great. Thanks, Ephraim.
My pleasure.
And that's been this week's edition of Equity Analyst Forum. We'll see you again next week.